Hello, everyone. Let's get straight to today's strategy. Keep buying the SQQQ Index ETF. Continue to add positions. Next, our buying target is below 23. So buy under 23. As for target price, we're aiming for 38 to 40. For the timeline, aim to hold until around July 20th at the latest. So that's our time frame and the price target. This point is crucial, so let me repeat it. Today's strategy is keep buying SQQQ. Add positions below 23, target 38 to 40. Hold until July 20th at the latest. Meanwhile, you can use a half position strategy we discussed before, or buy gradually in stages. Let me explain in details. For example, at this level, right now it's 22.48. So around 22.5. At this price, you can build up to 40% of your total position. You can reach 40% of your position here. Now, how do you do this specifically? There are several steps. First, build 40% of your position here. Then wait for a rebound to 27. Once it rebounds to 27, there's usually a pullback. Then it should move up directly. That's basically the process. This is the detailed approach. First, at the current 22.5 level, you can buy 40% of your position. When it rebounds to 27.5, sell 20% of your holdings. At that price, sell 20% of your position. After selling that 20%, wait for a pullback to around 25. It could drop to 24.5 or maybe 25.5. In this price range, buy back the 20% you sold earlier, rebuild that 20% position. So add back what you sold at 27.5. Once you've added back after this adjustment, it should rally straight to 37 or 38. So it's likely to head for 37 or 38. When it reaches 37 or 38, follow the same plan as before. Sell 20% of your position first. After selling that 20%, hold the rest. Wait for it to reach 40. For the remaining position, wait until SQQQ hits 40. And then gradually sell off the rest, half at a time. That's for the final small position. Just let it run as high as it goes. Yeah, this is what we call the half position, semi-rolling buy strategy. We need to make sure that from now on, starting from June 5th, all the way until July 20th, up to July 20th, every single day, every day, you should have at least 20% of your position in SQQQ. Keep this until it reaches 40. So make sure you always hold at least 20% each day. That way you keep a base position and you're using this rolling strategy. This is very important. Never let go of your base position. That's the first key point. Second key point, let me explain further. We need a deeper understanding of SQQQ. That way we can hold it with confidence. Let's look at it from 3 angles. What, why, and how. We just talked about how to buy, how to operate, using this half position semi-rolling strategy. So what is SQQQ? What exactly is SQQQ? It tracks the Nasdaq 100 index. It's based on the Nasdaq 100. It's made up of Nasdaq 100 components, so it holds stocks from the Nasdaq 100. But with leverage, it's a leveraged ETF. How much leverage? It's triple leverage, short. It provides 3 times inverse exposure to the Nasdaq 100, so its underlying assets. What are they? They are 100 top-weighted Nasdaq stocks. These top-weighted stocks, like I've said before, they are not fixed. For example, by the end of June, some stocks may underperform. Those will be removed from the top 100. If others perform better, they will be added in. This way, there's always a dynamic balance. It always maintains a basket of quality assets, so it's constantly being rebalanced. That's why I suggest this approach. Why buy SQQQ instead of, say, Tesla or Nvidia or Apple? Because, as I said, the Nasdaq is likely to fall from here. We expect a drop in the Nasdaq index. During this decline, individual stocks carry significant risk. There's a lot of risk with single stocks. You never know when they might plunge. A sudden drop could happen any day. Also, you don't know when good news will send them soaring or rise sharply. That kind of volatility makes it hard to manage, but the overall trend is still down. Look at the Nasdaq index, check the weekly chart. The overall trend is clear. It's sideways, then heading lower. In this environment, it's best to short using SQQQ. Buying SQQQ here offers the best risk reward. As I said earlier, it holds 100 quality stocks and they're adjusted regularly, so this helps us avoid risk. For example, not long ago, take PDD as an example. Many people went long on this stock since it's considered a strong e-commerce company. But what happened? It suddenly plunged 17% in one day, a 17% drop overnight, just because earnings missed expectations. As QQQ helps you avoid these risks, you can effectively reduce these risks. For example, if you're shorting individual stocks, it's easy to get caught off guard by a sudden piece of good news, which can send prices soaring. When unexpected rally and you're in trouble, in that case, it becomes hard to control your risk. It's just like this. If you have $10,000, maybe you want to take a shot. With $10,000, you can take some risks. But if you have $100,000 or $1 million, investing in index ETFs is safer than single stocks. It helps you avoid big swings up or down and give you more stable growth. Let me show you, index returns are not necessarily weak. Look at how much the index rebounded this time. The gains from this move are impressive. That's today's second key point. Take a look. For example, TQQQ. This run, TQQQ jumped from 40 all the way to 73. It reached 73. That's nearly a 75% gain. Up 75%. That's a gain. Now let's check another ETF. TSLL. That's TSLL. Look here. This is a 2 times leveraged Tesla ETF. A leveraged index fund from what price? From $6 up to a high of $16. It rose from $6 to $16. That's more than doubled. Roughly 150% return. Up 150%. Isn't that enough? Index funds are not worse than options. So here we just need to focus on index ETFs. Take NVDL as another example. This NVDL index ETF, look at its performance. It went from 28 to 56. That's a 100% gain. This ETF is 2 times leveraged on NVIDIA stock, so from 28 to 56, exactly doubled. That's a 100% return, and it happened in just 2 months, all within 2 months. Let's look at a few more examples. For instance, PLTU. Actually, that's PLTR. This is a 2 times leveraged ETF on the stock, a double long ETF. What about its move? It climbed from 16 to 58. That's almost a 4-fold increase. So from 16 at the bottom up to nearly 60. It reached close to 60. That's about 4 times return, a 400% gain. That's as good as any individual stock. It rivals any single stock. Plus, with ETFs, our focus as QQQ has one key feature. It's very stable. Compared to wide swings in individual stocks or ETFs or big surges and drops, SQQQ is much more stable by comparison. Much more stable. So this is our topic for now. Number 1 choice. That's all for today. If you enjoy my content, please subscribe and hit like. Thank you all. Overall, one more thing to add, remember no market goes up forever. There's no such thing as a market that only rises. So for the Nasdaq now, a pullback is inevitable. As long as the Nasdaq drops, SQQQ being inverse will go up. It's bound to rise. It will definitely climb. So you can feel confident about it. Thank you, everyone.